In this video, you will learn about withholding tax obligations. What is withholding tax? Withholding tax is a tax collection mechanism to facilitate and ensure the collection of tax due from non-resident persons on specified categories of Singapore-sourced or deemed Singapore-sourced income. When certain payments are made to a non-resident, the Singapore payer is responsible for withholding the tax due on the gross payments and for remitting this tax withheld to the Inland Revenue Authority of Singapore or IRAS within a certain time frame. Let us now go through an example. Singapore Company X engages non-resident Company Y to perform technical support services for Company X. Company Y sends employees to Singapore to perform the services for Company X. As the services are performed in Singapore, the non-resident Company Y is deriving Singapore-sourced income and is therefore liable to pay tax in Singapore. But hold on, the non-resident Company Y does not have any physical presence in Singapore, so how does it pay the taxes due? In such circumstance, Singapore Company X has the legal obligation to withhold a percentage of the service fees payment to be made to non-resident Company Y and pay the tax withheld to the IRAS within a stipulated time frame. What is a non-resident company? Under Singapore tax law, the tax residency of a company is determined by the place in which the business is controlled and managed. Control and management is the making of decisions on strategic matters such as those relating to company policies and strategies. Typically, the location of the company's board of directors meetings is a key factor in determining where the control and management is exercised, as this is where strategic decisions are made. A company is considered a non-resident of Singapore when the control and management of the company is not exercised in Singapore. What about the place of incorporation of a company? Does that determine its tax residency? No, the place of incorporation of a company is not necessarily indicative of the tax resident status of a company. Here are more examples to reinforce your understanding on the concept of withholding tax. Companies A and B are Singapore tax resident companies. Companies C and D are non-resident companies. Company A makes a payment to Company B. There is no withholding tax required in this case. Do you know why? Based on the concept of withholding tax that we have just learned, withholding tax only applies to certain payments made to non-resident persons. In this case, since Company A is making payment to Company B, who is a Singapore tax resident, withholding tax is not applicable. Now, non-resident Company C makes a payment to Singapore tax resident Company B in respect of Company B's business in Singapore. Company B is deriving Singapore-sourced income and is liable to pay tax in Singapore. In this case, withholding tax is not applicable too, as Company B will be reporting the income received from non-resident Company C in its annual corporate income tax return to the IRAS. What about non-resident Company D, which made a payment to non-resident Company C? Is withholding tax applicable? As Company D has no presence or operations in Singapore, Company D has no withholding tax obligation in Singapore. In the last example, Singapore tax resident Company A had obtained a loan from non-resident Company C and made an interest payment to Company C in respect of the loan. The interest income received by the non-resident Company C is deemed sourced in Singapore and withholding tax is applicable. Company A is required to withhold a percentage of the interest payment and pay the tax withheld to the IRAS. Only specific categories of Singapore-sourced or deemed Singapore-sourced income received by the non-resident will attract withholding tax. So, when is income deemed to be sourced in Singapore? Section 12 of the Singapore Income Tax Act provides for certain income to be deemed sourced in Singapore and hence chargeable to tax. For this withholding tax series, we will only focus on certain deemed sourced income under Section 12(6) and 12(7) of the Income Tax Act. Details on these two sections will be covered in the next few videos. Withholding tax is applicable to any interest in connection with any loan, indebtedness, or any arrangement or service related to any loan or indebtedness. This applies to the earlier example whereby withholding tax was applicable on the interest payment made to non-resident company C. Withholding tax is also applicable on royalties, know-how fees, technical fees, management fees, rent, or other payments for the use of any movable property. We will go through each of these payments in detail in the subsequent videos. After knowing the types of payments made to non-resident companies which are subject to withholding tax, the next question is, how much should the Singapore company withhold? The withholding tax rate depends on the nature of the payment. The rates shown here are the domestic withholding tax rates in Singapore. Lower rates may apply if the non-resident person is a tax resident of a country or territory which has a tax treaty with Singapore. For the full list of withholding tax rates, visit the IRAS website. There are two different tax rates. Technical assistance and service fees, as well as management fees, are taxed at the non-final tax rate, while the other types of payments are taxed at the final tax rate. The final tax rate is the reduced rate of 10% or 15%, and it is applied on the gross payment. The following conditions need to be met for the reduced rate to apply. The payment is not derived from any trade, business, profession, or vocation carried on in Singapore by the non-resident company, and the payment is not effectively connected with any permanent establishment of the non-resident company in Singapore. Under the final tax rate regime, the non-resident company does not file the corporate income tax return to the IRAS, and thus the non-resident company cannot claim tax deductions on business expenses from the income derived. The prevailing corporate income tax rate of 17% will apply if the mentioned conditions are not satisfied. Under the non-final tax rate regime, the non-resident company may submit the certified accounts and tax computation to the IRAS if it wishes to claim tax deductions on business expenses incurred in deriving the income. A refund of the excess tax withheld will be given if applicable. In this case, the non-resident company will be subject to a withholding tax rate of 17%, which is the non-final tax rate. Here is an example to illustrate. A Singapore tax resident company G obtains a loan from a non-resident company F and makes an interest payment of $1,000 to company F. The non-resident company F does not have any physical presence in Singapore and thus did not derive its income through any operations in Singapore. As this interest payment is in connection with a loan which is used in Singapore, this is caught under Section 12(6) of the Income Tax Act. Hence, withholding tax is applicable on the interest payment. Company G is required to withhold 15% of the gross interest payment, which is the final tax rate. This works out to be $150. Company G will remit $150 to the IRAS and pay the balance of $850 to the non-resident company F. If company F is a tax resident of a country or territory which has signed a double taxation agreement or DTA with Singapore, a reduced rate may apply. We will go through the topic on DTA in more details in our subsequent videos. Let's recap. Withholding tax is a tax collection mechanism to facilitate and ensure the collection of tax due from non-resident persons on specified categories of Singapore-sourced or deemed Singapore-sourced income. Under Singapore tax law, the tax residency of a company is determined by the place in which the business is controlled and managed. A company is a Singapore tax resident if the control and management of its business is exercised in Singapore. There are two broad categories of tax rates for withholding tax purpose. The final tax rate is the reduced rate of 10% or 15% and is applied on the gross payment. Certain conditions will need to be satisfied for these rates to apply. Otherwise, the non-final tax rate of 17% will apply. This is the prevailing corporate income tax rate. Technical assistance and service fees, as well as management fees, are subject to withholding tax at the non-final tax rate of 17%. Lower withholding tax rates may apply if the non-resident company is a tax resident of a country or territory which has a DTA with Singapore. You may visit the IRAS website or contact us for more information.